Okay, recording this video, it's coming up to the European Open, Friday 22nd of August 2014. Hope your trading is going well. We are lining up for some exciting trading either Friday or Monday. My mind has been pretty dull this week, not really many decent moves, but I think something is about to crack. Friday's going to be interesting, Monday's going to be interesting, not sure which day is going to be best. So, want to talk about exhaustion patterns, and it plays in nicely. I got a great little email from Phil this morning asking a question about exhaustion volume, and kind of rephrased it here. Do market tops and bottoms always come with exhaustion volume? So, answer that question. I've kind of got a stock standard answer to that question. You might have heard it before. The answer goes something like this. On shorter time frames, you will always see exhaustion volume on the downside and on the upside. So on kind of intraday charts, whether they be 15-minute, 30-minute type charts, or 4,500 or more type tip bar charts, you'll always see those exhaustion patterns. The reason for that on the shorter time frames is essentially everybody that's entered on a short time frame has needed to exit by the end of that time frame. So whatever chart you're looking at on those kind of shorter time frames, the day traders are in and out either within minutes or hours or a day or two. So effectively all the volume that gets in needs to come out by the end of that kind of time frame. So you get symmetrical patterns in better momentum with exhaustion selling and buying. Now the answer for the longer time frames is different, and the reason for it being different is we get exhaustion sell signals, but we get far fewer exhaustion buy signals. Now the reason for that is that on the longer time frame charts, people that are trading daily, weekly, monthly type time frames are more buy and hold, more institutional money. There's more kind of pension money, insurance fund money that's kind of flowing in, that's sticking around for the long term, and so you get far more flows in and fewer flows out. And the money flows in on dips, obviously, so we get big volume on dips, but then on highs we don't get corresponding kind of big volume flows. So, long-winded answer, but I can show you in this daily chart of the E-mini what that ends up looking like in terms of volume patterns. And what you'll notice here is that little tops that we make on the way up in this trending move for the last year, this chart runs for just over a year, you can see we have market bottoms and market little tops being made as we go. All the tops are being made with little Rambo patterns. You can see here amateur bars, low volume activity at the highs. And what we tend to do at the market highs here is we're just rolling over. We're just seeing a lack of demand. All of this is showing no demand type patterns at these highs. And so when we sell off, the institutional money, the professional money, the longer term money kind of comes in, picks it up at the lows, and you can see all these blue bars down here on these little dips. So all the big money flows are coming in when the market kind of sells off in these little dips, but the market's topping out or making little localized highs and kind of selling off a little bit after showing a lack of demand, no demand patterns, and these nice little Rambo patterns with amateur bars, kind of low volume type activity at these highs. So shorter time frame charts look totally different. Longer time frame charts, this is the type of pattern that you get. So that's my normal stock standard answer that says don't expect to see many exhaustion patterns on daily time frame charts of the indices because of these institutional type flows. However, right now, happening at the moment, and we haven't had this for a very long time, we've got some nice little exhaustion buy signals coming up on the daily charts, and I'm going to show you those. So that's just an E-mini chart, daily chart, day session only. And I'm going to show you the Nasdaq. So this is the Nasdaq, and what we're doing, we're just going off making this pattern here where we have had exhaustion buy in the last couple of weeks. We've had a Rambo pattern up here with amateur up bars where we lost it a little bit with bearish divergence comes in, and then we're making a price confirmation of a high as the moment as well. Pullback to end of trend on the Nasdaq has just gone off. We've got more little Rambo patterns here with the last 2 days activity with a cyclical resistance kind of going off here. So all of a sudden on this time frame where we see fewer kind of exhaustion patterns on daily type charts, we actually have an exhaustion pattern in the background here with some weakness showing bearish divergence and a price confirmation with an end of trend here. Now obviously the market's been so strong on the upside, I'd expect the resistance level to be tested a little bit. This isn't going to just break down straight away, but it is showing some weakness here after an exhaustion pattern. So that's relatively unusual kind of on the daily chart, so that's worth noting. Russell index, we don't have volume data, so that's why better momentum is a flat line here. All we've got is pricing signals, but we've come into cyclical resistance on the Russell chart here that's sitting quite a little bit lower than the last kind of pivot high that we had up here at 1210. This is the S&P 500, so this is different from the futures contract, and this just went off a couple of days ago. Well, today's activity, Thursday's activity, exhaustion buy. Again, pretty unusual. It's coming in with a pullback at some point. The timing of this is pullback to end of trend going off kind of shortly. So we've got a cyclical resistance that's coming along with an exhaustion pattern as well. So temporarily, we've kind of run out of buyers at this point. So that's kind of interesting. I like seeing the exhaustion patterns on left shoulders here, where we had a Rambo pattern kind of last. That kind of is more useful. What we'll have to do with this signal when it happens at cyclical resistance, which is an end of trend, we wait for the second cyclical turn after that. So we're going to go through a little bit of cyclical activity, kind of just playing out until we test and have a bearish divergence signal kind of come in here. But again, that's quite interesting. Relatively kind of unusual, rare, to see an exhaustion pattern on daily chart. So I'm looking at that, very interested. And here we go. Here's the Dow. Same thing, exhaustion pattern on the daily chart here. We had our sell-off, we bounced back underneath the previous high up here at 17,000s, and we've got an exhaustion pattern going on. We've also got a cyclical resistance kind of due on this time frame. Again, the market's been so strong, I'd expect us to have possibly play with the overshoot, have an overshoot of the resistance at this point, but again, another exhaustion pattern, which is kind of interesting. And then back to the daily chart of the E-mini. So the E-mini's not showing us that kind of exhaustion pattern. We had it on the downside here on the sell-off, but we've not had it. We've been floating back up with all these amateur up bars, just showing it's fairly weak kind of going on, and we're setting up timing-wise for a nice cyclical kind of resistance. So normal stock standard answer for me is to say, don't expect to see many exhaustion patterns on daily time frame charts of the indices because of the imbalance in flows. The longer term money buying in on dips gives us those kind of exhaustion patterns and big volume patterns on dips, and then highs, what we tend to see is no demand. But just interestingly, right now, over the last couple of days, we've just had those little exhaustion patterns go off on a bunch of kind of indices on the daily chart. So that for me is really interesting. Now, again, the market's been pretty strong. Remember, we're going back to this daily 135-minute and the 45-minute chart. And I just want to remind you, I keep on saying that I'm waiting for pullback to end of trend to go off on these lower time frames. So we've still not had pullback to end of trend on the 45-minute chart. We're still in an uptrend on the 45-minute chart. We'll probably also need to put in pullback to end of trend on the 135-minute chart, and that will sync up with cyclical resistance on the daily chart here with the Rambo patterns. So potentially on Friday we could get that little sell-off that gives us our pullback to end of trend on the 45-minute chart, and then that starts to ripple through on the 135-minute chart. So over the next couple of days, for me, that's really quite interesting. And then the last thing I want to talk about, this kind of whole idea of exhaustion, is not only one of volume patterns, and I'm just going to switch off better momentum up here on the price bars, and I'm actually going to switch off better pro-am as well to show you this. Let's switch off better momentum here as well. Now this is a 4,500 tip bar chart using just better sine wave here, and these are the day sessions, the wide breaks between these bars. These are the overnight sessions kind of going on, and really interesting pattern kind of happening here. This is showing price exhaustion, and it's something I'm going to link to in the notes kind of below this video, because it's an interesting read on some mathematical analysis of markets that has been done by a French mathematician called Didier Sornet to do with what he used to call log period bubbles. I think he's calling them something slightly different, but here's the idea, and you can see it happening in this chart. We had a little sell-off, a great little sell-off, on the 4,500 tip bar chart that ended up with a pullback to end of trend. We tested and we bounced from there. On the upside now, we've also made pullback to end of trend, but in the last couple of days, leading up to FOMC, with the market being so strong and bouncing off that low, we've overshot our pullback to end of trend. And what we've gone into here is this kind of creeping up and creeping up pattern, where you can see we broke the first resistance, but after then the support and resistance have just held and held and held, and they're getting closer and closer together and tighter together, like that. That pattern is almost like hyperventilation. It's like you're sucking in the air, sucking it in, and you can't get any higher and higher up there in the market, and it's just getting overextended and overreaching up there, and these little patterns are getting tighter and tighter. Well, Didier Sornet was talking about that in his log periodic bubble mathematical analysis, and you can see this on a bunch of time frames and a bunch of different markets. That type of pattern is unstable. It leads to a bubble type activity and some kind of resolution on the downside, a mini crash if you like, because the energy is being wound up and wound up and wound up, and we're just waiting for that kind of break. Now I'll link to his work, but it is kind of quite interesting, and there is a great little chart. I'm just wondering if I can pull it up here quickly. Here we go. Here's the chart that actually came from the Hussman letter. This is a while ago. I put this out on Google+. But you can see the pattern here that Sornet is talking about, where the market's rising and rising, and it has these little smaller and smaller kind of ranges between the highs and lows, and it just gets really kind of overextended until it finally kind of cracks and pops. So he's calling that the textbook pre-crash kind of bubble. That was going back to January 2014. But it's an interesting kind of pattern in it. You can see it on this 4500 tip bar chart with today's activity, the way it's just kind of creeping up and just getting tighter and tighter. This energy will get released in some way, usually to the downside. It's possible it could go for a very quick kind of burst to the upside and then immediately kind of crash down. But I think the more likely thing is just to kind of crash through a support level. So, in terms of trading levels and so on, anything around kind of the mid-80s, getting below that on Friday or Monday is going to be kind of interesting. It might kind of take us into a trending move on the 4500 tip bar chart on the way down. So not only have we got these kind of patterns on the indices where we've got exhaustion buying, this price activity is also some kind of exhaustion in terms of price, the way it's kind of just winding up and winding up like this. So there we go. It should be good trading on Friday and or Monday. I hope you trade it well, and I'm looking forward to it.